Hello everyone, thank you for joining the session today. So we are going to discuss about stock safari nifty option chain analysis. In this webinar the main agenda would be discussing about option chain analysis, how we need to read the data when it comes to the values what we see in this option chain analysis, and also how we need to understand the concept behind these numbers. So in this video we are also going to discuss about our Google sheet, and we are also going to discuss about NSE website and Nifty trader and even MCH also. So by getting some good idea about option chain analysis, then we will try to implement those ideas into these websites, whether we can able to understand what is happening in the market or not. So before getting into this quick webinar, I would like to quickly introduce about our option chain analysis, which is stock safari nifty option chain analysis. This is an automated Google sheet where we used to get this data from Python scripting and API approach. We always take the data from API from brokers. So we all the time we get this data in a raw format. Taking those raw format data into this Google sheet, it has some different pipelines. So we get this raw data into one Google sheet. From there we get the raw data, as you can see on the screen. So this is the second level of raw data which we used to get it from the APIs. Or I mean, generally we don't get this in a very good format. So in another Google sheet we used to get all the data loaded into one segment, and from there we filter out those raw data, and this is the finalized raw data where we used to segregate all the calls into one segment and the puts into other segment. And taking all these two sheets into our consideration, now this raw data will be shifting into our nifty option chain analysis. Once the data is going to sit into this location, automatically all the calculations will be done in the background, and it gives us some good graphical representation. What was the major difference when you see the comparison between other websites about option chain analysis is like, we do have some good graphical representation where you can easily able to identify what is happening in the option chain analysis. So on the as most of the people are aware about this option chain analysis, I'm not going into details about how. One second, I think someone is going to join them. So in this meeting we are not going to completely cover up the basics about option chain analysis. I think if you really wanted to understand the basics about option chain, about our Google sheet also, we also have few videos in our YouTube channel. You can go through that, and if you have any queries also, we have an WhatsApp channel where everyone can able to put a message in that group. So you can have your questionnaire in those areas. And moving forward, I request, don't post any of your profits into that channel. We'll strictly use this WhatsApp channel is only for our knowledge sharing. So even if you really wanted to share some insights about your trade, instead of putting your profits into the screen, I mean as a screenshot, don't do that. We don't want to motivate anyone into this segment. Actually, only thing is, we all have to learn together. If you really wanted to share some insights about your trade today, for an instance, yesterday if someone has has taken any trade, he really wanted to share those insights to our channel. You can explain your learnings, at what time you have taken and what is your challenges and why you have taken the trade. And most of the time we are not 100% sure that we are going to put ourselves in a profit zone, right? So there might be few areas, days where it is not our days, right? So even those days also, if you come up with losses also, there might be some learnings in those loss, right? Though it is a paid loss, paid learning, let's put that paid learning into our group, so that we will also get learned about what is your learning from those from your trade. So all the time use those channel as a learning approach, not to share any profits. Even for me also, I don't want to really don't want to share the screen recording, but for the sake of YouTube I'm doing it. Rest of the people who really wanted to share some insights, please only share your knowledge sharing. And let's get into the concept now. So as you already know, like in the option chain analysis, This Google Sheet only discuss about Nifty 50. As of now, we are not doing any option chain analysis for Bank Nifty. We do also have automatic option chain analysis for natural gas, commodity, crude, and all the commodity segments. We have automation, but it's still it's still in a beta version. It's not yet finalized. So for as of now, we only have fully developed automated Google Sheet into this Nifty 50. So let's get into the concept now. So on the left side you can see the calls. Let me zoom in. Let's only discuss about this area. So as you can see on the screen, on the left side we have completely the call side and put side. So in the middle you can see the strike prices. So here in this option chain analysis, we also have given you the live Nifty price on the top right side. Okay, so you can, there is no need to hunt for your live Nifty price. You can directly refer to this cell, which gives you the live Nifty price, and this data is going to refresh every 30 seconds, and maybe in future we will also trying to make it 10 seconds, but due to some load in API we are unable to do it. But as of now, 30 seconds is a very good data. You can directly refer to this sheet. And on the left side, when we are discussing about calls means when your Nifty is in the bullish segment, you can see the prices movement happening similar to the Nifty bullish segment. So whenever the prices go up, we always have to refer to call side. When the prices go down, if you really think your Nifty is going to make a sharp downfall, you have to refer to the put sides. So as you can see on the screen now, let us go with the Nifty prices here. As of now, the Nifty price is around 25,350. So let us identify 25,350. This is our at the money area, right? So this is the present Nifty price. So on the left side you can see what is happening in the market. So most of the time when you are referring to option chain analysis, you need to refer to volumes, option open interest, and the prices. If the price is increasing, and there are few fundamentals where we need to understand to take a direction of the Nifty. So if you see on the bottom, on the top side, we have given this cell which talks about LTP of the present strike price, and this is the percentage of our change, and these are the points in particular LTP. For an instance, if you see in this one, we have around 22,700 strike price. For this 22,700 strike price, what is the LTP for this one is around 25,583. This is the LTP for this strike price. And what is the change of this LTP? It was around 6%, and 6% in numbers, around 146 rupees has been changed compared to the previous close price. And do you see any volume change in open interest? And if you see, there is, I mean, most of the time, since this is deep in the money, so let me go and I'll give you some quick idea about so this is the at the money area, and this is the in the money. You can see the color representations. So this is the in the money area, and this is the out of the money area. Even in the in the money area also, you can see on the top, this we call it as a deep in the money. That means it's very far beyond the present Nifty trading price. So likewise the same approach will be carried forward to the put side as well. If this is the in the money and this is the out of the money options. So now let's see what is happening here in this particular strike price. So we can see the LTP, and the change in the LTP has been increased, but you can see the open interest for the indicator doesn't have any indications. So by default in our option chain analysis, if you don't have any volume or any open interest, we consider that as a downfall. Okay, so you can see there is no change in volume, no change in volume, I mean change in open interest also. That means no trading is happening in this particular area. Though you really wanted to enter this one, but there is no sellers or no buyers. They don't want to do any trade. When it comes to this particular segment, you can see for this 23,000 strike price, the LTP is around 2300, but we can see some changes happen in the prices. But you can see there is some even though we can see the market is in bullish segment as well, but there is some change in prices. Why? Because there is some supply demand crunch all the time. Actually, in the background of our Nifty option chain analysis, everything, the major role plays into this option chain is supply and demand. If you have enough supply and enough demand, then automatically your contracts will be taken immediately and sold immediately. But when it comes to this segment, as you can see, as I told you, these are the deep in the money contracts where we will be having a liquidity crunch. So very less liquidity, and as you can see here, the total contracts itself is around 18,975. We can also calculate the total the pricing of this particular contract into 2374. So somewhere around the for this 23,000 nifty strike price contracts, the total contracts, what how much contract size is around 4 crore 50 lakhs, somewhere this was the value of our particular contract. So you can see even in the deep in the money itself, we got very big numbers. So you can consider when you see the entire nifty option chain analysis on a particular day, crores of money is going to pump in and pump out in this area. Within minutes we can see number of crores will be pumped into the market and wiped. Also we can also see many amount will be wiped out in the market as well. So in all the money, within fraction of seconds, we can able to see a lot of changes in the market. So likewise, even if you see, though we can see some great percentage increase in the prices, but when it comes to this one, there is some crunch in open interest. What is happening? People are squaring off their positions. They are not believing. I mean, even they feel like I am not able to generate money if I am going to sit in this particular contract. So what they will do, they will square off their positions. So you mean to say, like, when we are squaring off the position means they let us take an example here. For an instance, let us take real estate as an example. So here he is a landowner. Open interest is a landowner. Okay, here change in open interest. Here the landowner want to sell his property. What is the cost of this property? For an instance, let us assume one property is around 1 lakh. Now he wanted to sell it in the open market. Okay, so what is happening here? The demand of this particular contract was very less. So though the seller want to sell this particular real estate property for 1 lakh, buyers are not ready to buy at the same price. You got my point? So seller is ready to sell at 1 lakh, but buyer wants to buy at 80,000 rupees. That's where the liquidity crunch comes into the picture. So in this deep in the money, all the time buyers has a demand, sellers will have less demand. Why? Because we have supply demand crunch in this area. So most of the time we do have great supply. So you can see the open interest here, we do have very good numbers in good contracts here, but people are very less to buy this contract. So you can see the volume, what we can see here. So the volume is very less actually. Even no buyer is ready to buy at this prices. So here if you see, we got some volume here, but though the volume we can see, they are not putting a open positions. Why? Here see, you can see here 225 is the open interest, but here the volume is around 450. What it means, the real estate property, the seller wants to sell at 1 lakh, but the buyer want to buy it 50,000 rupees. So there is no deal is happening in between the seller and buyer, because end of the day the seller who really wants to sell at 1 lakh, if he gets the same buying opportunity, then only his property will get into the market and it will square off the position. If someone is sitting at 1 lakh and another person is sitting at 50,000, nothing will happen. Someone has to compromise. Either seller has to compromise or buyer has to compromise. If you see in this area, the seller got compromised. So he might be not finding a better opportunity to sell his contracts. What he has done, chalo bhai, let us match the buyer requirements. Let me do. Though I am requesting for 1 lakh, if buyer is ready to pay at 80,000, TK, I have urgent requirements, so I will sell it at 80,000. So that is what happening here. So he is squaring off the positions, and he noticed there is some liquidity crunch, and also the price might drop also in this particular area. So likewise, all the time my suggestion is, when you're trading in Nifty option chain and if in Nifty 50, always look at the money area, and in the money area, so try to take at least 300 points. Now don't go beyond 300 points. So there are few people who do this deep in the money contracts earlier. Now I think everyone can able to do in the deep in the money areas, but when it comes to earlier, there are some restrictions even from SEBI also. Until or unless if you are an HNI client, that means high network income candidate, only for those people these contracts has been opened up actually. Even now, even in SEBI also, now even today also, if you see, like we can also trade for next year stocks also. For that one, even SEBI is not allowing us to do it. But in US, if you see in US market, you can do next month's, or even you can, even for stock also. Now if you see for Nifty 50, the option chain analysis, you can see some good liquidity in index actually. But when it comes to stocks, we have so much of liquidity crunch in options, for stock options. But when it comes to US, you have very good liquidity even after 1 year. I mean, if you are presently, we are at 2025, right? In US, if you really wanted to, if whenever you have time, go in stock options in US markets and check the liquidity. Even for the next year also, they have a liquidity, very good liquidity. But when it comes to in Indian stock market, though we have some good liquidity only in the index, there are few stocks where, that's why we have very limited FNO related stocks which has ability to trade in this future and option segments. So all the time, whenever you trade in stock options, always be cautious, since we have some liquidity issues. So all the time my suggestion would be, all, if you are at beginning, if you are at a beginner, always go with the index options only. Even the Sensex and FinNifty also we have, but even FinNifty also has some liquidity issues. So my suggestion would be, always go with Nifty, Bank Nifty if you have some good capital, because as of now Bank Nifty is carrying with only one expiry. And Sensex, if you are a high risk trader, I suggest go with that one. Or else because Sensex has some sudden spikes where it will wipe out all your capital at one trade. So if you are at a beginning level, always go with Nifty, since it has some good capability to where we can able to understand, and it will not move suddenly. We will not get any sudden spikes in the market actually. That was the major thing. So if you see in Sensex, something, it will act like some where you can compare with commodity segments like crude is very sentiment actually. Even a small data can really turn, I mean, this crude prices actually. So all the time, so that's why, no, look, whenever you trade in commodity segment, you need to have some very good understanding about global news and technical analysis. Even option chain, and when it compare, when most of the time we discuss about option chain analysis, but we say most of the time this can able to give you only 50% of your stock prediction, what is happening in the market, and we can able to identify what is happening in the trend. So I hope you got some good understanding about this LTP and change in open interest. So let us take another example here to understand much more better about change in open interest and example here. I will do one thing. Let us take one example here for our better understanding. So let us think, we have one property around 1000 rupees. Okay, so let us think Nifty is around 10,000 rupees. Okay, now there is some price for we will only see at the money area. The price of this 1000 rupees 10,000 rupees strike price, this is Nifty price, this is Nifty live price. Okay, and presently we are trading, I mean, we are taking, so this is the Nifty live price, and this is the 10,000 Nifty strike price we are taking about. So the strike price for the call side, this is the call side. The LTP for this one is around 50 rupees. Okay, and let us see change in open interest, change in Y and this is open interest. Okay, this is the day one. So let us assume Nifty is starting today, the trading is happening today itself. This is the first day of our market. Okay, so change in open interest will be 0. Let us assume by end of the day, maybe down the line when the market has opened, some open contracts has been built up. Okay, let us assume we got around 10 open contracts built on call side. Let us take same example for the put side as well, 0, and we got around 8 contracts. Okay, this is change in open interest and this is open interest. This is call side and this is put side. Okay, tomorrow we might notice there might be some good gap up. 10,200 is the Nifty stock price. So what would be happening in the next day? Since we got some good spike in the market, this might go above 60 rupees. Okay, this also can go up to 50 rupees. Okay, now let's see, this is how the market used to work. Now let us see what is happening in the change in open interest. So yesterday we noticed already 10 open interest contract, total open 10 open contracts has been built yesterday, which is Monday. Okay, on Tuesday we noticed, since the open interest would be same on Tuesday, but we can see some difference. I mean, how this can be like, if you have some any change in open interest, then automatically this number will change. We will see it on Wednesday. So in Tuesday we got 3 new open contracts. What we can see, if new contracts are opening, we can see some good supply and demand. Let us think 62. Again 10,000, we are taking the same strike price for 10,000 only. Here we can see some drop, -2. So the price can be around 45, and this can be our 8. Okay, on Wednesday again, let us go to Wednesday now. On Wednesday, what would be happening on the open interest side? Automatically by end of the day, the open interest plus change in open interest will be carry forward to next day open interest. So this will be 13. Okay, here again the change in open interest will be, or depends on the trading activity on that particular Wednesday trade. So let us again sit on this 10,000 strike price. Here if we can see, if Nifty is trading around 58 rupees. So we can also see there is some huge crash happening in the market. Let us see, Nifty is around 9,800. Automatically what will be happening, if Nifty price is going down, automatically this price will increase. Let us make it as 60. And there are some good open interest built up in this particular area, because there is some drop in the prices. So let us assume we got some good open contracts, around 6 new change in open interest, and let us see 8 minus. So how we need to calculate open interest plus change in open interest, automatically 6. So the next day what would be happening, this is equal to 6 open interest plus change in open interest. This will be 12. Again the same thing we need to see it here as well, is equal to what is happening in the next day open interest, is equal to open interest plus change in open interest. Automatically there is some decrease in the change in open interest. I mean, open interest got decreased, and the change in open interest, it's all depend. Change in open interest means always depends on the intraday approaches. I hope this example can able to give you some good idea about what is open interest and what is change in open interest. Now let's get into the concept again. Where is our price? Nifty is around 25,350. See, this is our live price. Okay, 25,350. Let me zoom out. Let me take this example here. I think we have some liquidity issue. I think 25,350. Yes. So here we can see the price of this particular strike price got increased, but there is an open interest has been built up. Then what we used to consider, let us go to there are four major categories that we need to understand in stock options, actually, I mean Nifty option chain analysis. So let me take that one as well for your better understanding. So we'll do one thing, we'll try to understand how actually we need to understand the data. So there are major four categories actually. If you see here, we have long build up, short build up, short covering, and long unwinding. So let's understand much more detail. So let us only concentrate on call side as of now, because if I'm going to discuss about put side again, it would be a bit confusing. So in Nifty, please make a note of this one, because this can really help you to understand. So if you start listening, and maybe after some time you will forget what I really told you. So if the call price is increasing and open interest is increasing, then we can see call long build up. That means it is a bullish segment. People are ready to buy it whatever the price it is in at that particular contract. People are seeing there is some good spike up is happening in the Nifty, maybe some good news floating in the market. It can be multiple reasons. Okay, so there are traders who are opening a new call positions, long call positions, expecting the prices to rise further actually. So that's where people are buying the contracts. New buying opportunity was happening in the market. So that's why you can see where you can see those options. Actually in Nifty yesterday we didn't get that much opportunity, but if you see in the put side, the concept would be same. If price is increasing, yesterday actually the market is in bearish mode, so that's why all the time you need to, if you're seeing on the put side, we have to discuss in reverse approach. If market is in downwards, we can see if market is in the downside, the price is increasing for the put side, and also the open interest for this contract is also been increasing. So automatically what it's saying, long put, that means people are ready to buy at particular price. They are not square, they are right. I mean most of the time when you are referring to option chain analysis, we always need to refer the call writers, but what is happening here, they are ready to buy at the same price. That means they are buying the contract, they are not selling the contracts, they are buying the contracts, and they are seeing some very good opportunity in the price movements. So we need to give all the time first preference to price. Is if the price is increasing and open interest is increasing, then automatically we need to consider this as a call build up, long build up. So bullish sentiment, traders are opening a new positions in call side and expecting the price to rise further actually. Now this is one segment for the bullish area. Let us see one more category here. If price is increasing, the open interest is decreasing, means again this is a bullish segment. Why? Because this is a short covering approach. Traders are closing their short positions, driving the prices where if you want, I can give you some example here what is happening in this particular area. So we can see the short covering happening, means earlier also for this particular contract we might have already seen long put. That means the price is increasing and open interest for this particular contract is also increasing, but they have taken the profit, they have entered the trade maybe around, for an example, let me take this example here. So in this particular contract, 25,350 rupees contract, as of now we can see long put. What is happening, people are ready to take whatever the price it is, they are expecting some good price. So what is happening, price is increasing, open interest is increasing, so automatically we can see the segment as long put. But if you see the same contract below, what is happening, short covering is happening. Means if though the prices are increasing, but the open interest for this particular contract is getting reduced, means the people who are writers, all the time now we have discussed about buyers, but here there are few writers, means these are the sellers who are expecting these prices might fall much more actually. From 74 to, they are expecting this price can go up to 30 rupees. Those people, because these are the option writers. For option buyers, if you really wanted to enter in this particular trade, around 51 rupees, right? So 52 rupees into 75, you need to spend only 4000 rupees to enter the contract. But for the option seller, he need to spend 1.5 lakh to enter this particular trade. So he, when it comes in the overall future and options, all the time 90% option sellers are going to win the market. Okay, they have some great respect in the market because they upfront take the amount, and they keep their entire capital into risk, and all the time they win in the market actually. Option sellers are going to win in the market. Option buyers, all the time you need to be in cautious until or unless if you have some systematic approach of doing tradings. So you need to, based on rules based approach can help you in the market, but all the time writers has some major preference. So what is happening here, maybe this writer might have entered at 75 rupees, or else maybe around 80 rupees. At 80 rupees he might have sold this contract, or else 70 rupees, let us assume 70 rupees. So at 70 rupees the option seller might have entered the contract, but by seeing this moment, since there is some bad news which he might have not expected, because no one can predict the market. So what happened, automatically the prices are getting increased, and by seeing this long puts in the below, I mean in the out of the money contracts, he might be believing that there is some market, there is some good bad news floating in the market. Let's not get into those segment. Let us square off our positions. So what he will be doing, if option writer is feared, if he is fearing about his positions, that's where the short covering positions will come. So short covering means he has square off this position. How the seller can square off the position, until or unless he has to buy the same contract, because upfront he started his position by selling the contract. But if he want to close this complete contract, he need to put in buy opportunity, where as we can see some good sentiment in the market, that market is in bearish mode, people are ready to buy at the same whatever the price it is. So automatically what is happening here, option writers are going out of this scope. Again they might be entering, if they are squaring of these positions, we can see after squaring of their positions they might also enter into this long put to cover up their losses. Okay, that's how we need to understand. Now let's again, I think now this is clear, right? If price is increasing, open interest is increasing, that we need to consider as long build up. If price is increasing, open interest is decreasing, that we call it as a short covering. Bullish reversal, traders are closing their short positions. Now let us take the same example here. Let us consider the call price is dropping and open interest is building up. So in these conditions, what it means, there is some bearish sentiment in the market. Traders are opening a new short position, expecting the prices to fall further. So for this example, again let's go to the option chain here. So that part you can see it here. So this is at the put side where the market is in bearish segment, but here if you see the short calls are happening. That means though price is increasing, the open interest is building up. That means option, the call side, writers are opening a new positions in this area. So that's where we can understand they are shorting their calls. They are expecting market can fall much further. What is the present strike price? 25,350. This the contract, the new contracts building is around 47 lakhs actually. So this 47 lakh contracts, these people are expecting the market can fall further, since they are rating of their call positions. So they are expecting this 81 rupees can go up to 50 rupees, because if call writers make money, if from the present price they have to go down from 81 rupees to 50 rupees, if it is going, then only these people can able to make money. But when it comes to long put side, if they are entering at 35 rupees, they are expecting 50, 60, 80. It's all about the price increment. But all the time selling means from the present price it has to go down. So if you see short calls means most of the writers means they are the big players. Actually we always have to respect the the shorters. Even long puts also will help us, but most of the time we need to identify the seller mindset. Actually if seller is fearing in the market, if he is squaring off his positions, done, something is happening in the market, because he can only able to predict the market. He can able to, with his capital he can able to control the market as well, because most of the, if you see most of the time in Nifty we get support and resistance. Where we are getting the support and resistance? Highest open interest in the call side, highest open interest in the put side. That means we are respecting the option sellers. Even market respects the option sellers. So always follow the big players in the market. If you really wanted to make money, always respect big players. Identify the option writers in this data. I know first time and the initial levels it would be very difficult for you to understand what is happening in the market, but always try to identify the option sellers here. So again, the price, if the price is dropping, open interest is increasing, that means the sellers are expecting the prices much go down, so they are at the same LTP price they are putting a shorting positions in the market. And we can also see one more segment here. If the price is falling and open interest is also falling, we can see call long unwinding. That means completely traders are closing all their long positions. They might be seeing some huge drop in the Nifty prices. So I can see this kind of an options in our in this area. So if you see here at 25,150, the price is decreasing, and also the open interest is also decreasing. People are completely squaring off their positions. They don't have much belief that this price is going to sustain. They completely come out of this contract because they feel something is scary in this particular contract. Even in the put side also we can see such instances. The price is dropping and the open interest is also reducing. So there is no liquidity, no contracts are ready to sell or buy in this particular contract. So that's why most of the time all these long liquidity issues we can't expect that in our major at the money and in the money area. So always we suggest go with the at the money area. If you really want to get some quick price movements, always choose at the money, or else if you are a safe trader, there is no safe in future and options. If you really wanted to don't go into this quick actions in the prices, always I suggest go at least 1 or 200 points in the money. Don't go beyond it, because if you go beyond the in the money areas, we will be having lot of liquidity issues. There will be no seller, no buyer. We have to, if one buyer comes also, we need to accept his price, because we already entered the contract. By God grace, if you want to exit that particular price, we always have to match the buyer prices, because there is some supply demand issue. But when it comes to liquidity at present strike prices, you can see the contracts 1 lakhs 1 crore 16 lakhs, I think 16 crore contracts means one in this particular contract itself we have around 1000 crores capital floating in this market, in this particular strike price itself. So as a retail trader, for you will not go more than 5 to 10 lakhs, right? Match to match 10 lakhs, I guess, or else most of the time we will be within 1 or 2 lakhs only. For us, we will not have some issues in entering the market prices. So that's why whenever the prices touch 16.75, even the price touches also, automatically your positions will be squared off. Why? Because we have so much of liquidity in this particular contracts. Okay, I hope you got some good understanding about this option chain analysis. Now let us see, there are few other websites which use those A values. So if you see, this is our NSE website where we can see some good understanding about option chain analysis, as you can. But here what happens, this is the raw data. Here we will directly get the open, the value what you are seeing here, it is different when it compares to our value. We are directly taking the complete lot size, but when it comes to NSE, they are going to calculate the lot, I mean the overall lot size. I mean we have around one lot is around 75 contracts, right? So they are going to consider one contract as 75. So that's why they are not going to give you the complete picture. If you really wanted to know how many shares are traded in this particular contract, open interest, we need to take it into, I mean we need to multiply by 75. So here in NSE it's very difficult to identify what is happening in the market. If you are a pro level trader, by seeing this data itself we can understand what is happening in the market. As we can see, the price is dropping and the change in open interest is also plus. So that's what it would be very difficult for you to understand what is happening in the market in NSE website. If you are very good at option chain, then I suggest go with this data, or else where there are few other website, Nifty Trader. Even sometimes I don't believe this data would be great, but for a beginning level, if you really wanted to understand what is happening in the market, you can go through this website. Automatically you can see there are call writing happening in this particular segment. On 23 September we noticed there is some writing happening in this particular area, right? See, all the time all these areas are call writers only. If you let us go to 30th September, see, a lot of call writings. People are expecting, they might have some idea. Why? Because all the time if we see call writing options, that means there are so much bearish in the market. People are straight away selling at the present LTP price. They are expecting one or two in this particular strike price. They are expecting one or two can go up to 80 or some other prices also, because all the time these put buyings are the intraday players. But most of the time call writers, they don't do this. I mean whoever the sellers are, they will not do any intraday options. They always have the weekly strategies, so they will wait for weeks or months. So if they see some changes in the market, then definitely they will square off their positions and they'll again shift to other contracts again. So always identifying the call writing can really help in the market. If you see, as of now the market is in bearish segment, you can see lot of put buying happening in the market, even at the money area and even in this area also. Okay, now in our Nifty option chain analysis, I mean even there are few areas. If you see here also, short put and liquidity, long liquidity issue, because here automatically the data will take some time for refreshment. Might be they take around 10 to 15 minutes for data refreshments. So within, if you rely on this option chain analysis, within 15 minutes anything can happen in your strike price. So always refer to Nifty NSE, I mean option chain NSE website, or you can also use your broker. Nowadays brokers are also giving the option chain ideas. Actually you can directly go through your Kite or Upstocks or any other fires also. They are at least giving you some suggestions what is happening in the market. But when you refer to our website, here in our Google sheet we have given you some good graphical representation. Just by referring to this option chain itself will give you what is happening in the market. By seeing this color itself we can identify something is happening in, if you see in this particular contract, no need to see the numbers itself. Automatically by seeing this color representation itself we can understand there is some liquidity crunch. If you see in other area, though I can see some green in this area, but the price is dropping, that means call writers are entered in this position. I am not seeing the numbers. But if you refer to this NSE or NSE Nifty Trader, all these areas we need to refer to the numbers. But coming to our Google sheet, no need to refer to these numbers. Automatically you can identify what is happening in the market. Short calls means call people are writing their positions. Even if you see in the green side, both are green, that means long build up is happening in the put side. So it would be very easy for you to understand what is happening in the market. And now let me give you some quick introduction about our Google sheet. Automatically this is a fully automated Google sheet where you can identify when the market is on open. You can see automatically the market is open and which expiry we are going to discuss about this option chain analysis. Automatically you can see the expiry date and this is the live Nifty price, and this is a consolidated information about option chain open interest for call side and put sides. And the beauty of our option chain analysis is we are going to give an a small indication what is happening and which direction the market is going. Actually, this is not a tip or calls. You only need to consider this as a understanding the market, which direction the market is going. And also all the time we give highest open interest calls, so all the time you can see the LTP of this particular strike price might be 25,300 is the highest open interest built in the put side. So we also have taken the weekly trend. If you are if you do lot of options selling and hedges also, we also give the weekly trend what is happening in the market. If you are intraday trader, we also give the sentiment happening in the market. If both the direction follows, then only we can able to see these directions or any automation symbols which you can see in this area. And here we can also get an option for CE buy and PE buy, and also for if there is some market is not in great shape, if it is in a range bound segment, automatically you can see there is no trade option. There will be one text note added here that it mentions as no trade, it is not a trading day. This segment here we have covered both option sellers and option buyers. And here you can see also the Black-Scholes calculations method, where we calculate the fair price for any of the contract. So if you see the present strike price for 23,300, the LTP was around 34 rupees, but as per the theoretical knowledge it should be 77. I think there is some issue with I think today Saturday Sunday, maybe on Monday you need to check this data, then automatically this would be around, if present trading price is around 35, our Black-Scholes method can give up to 40 rupees, because all the time theoretical values might be around the lowest price, and the supply demand ratio, sorry let me tell you one thing. The Black-Scholes method, if put price is around 77, here in our live Nifty price it can trade around 85 rupees also. It is only for our reference what is the fair price for this particular contract, but most of the time we can't get the fair price in our option chain analysis. Why? Because if you really wanted to see the fair price in deep in the money, there this theoretical knowledge can work, but at the money area, though we have some great liquidity in the particular contracts, all the time supply demand hits the market, because supply is very less and demand, if demand is more, automatically the prices will increase much more better. Actually, the theoretical values will not respect those areas. And here you can see on the call side, we can see top 5 open interest for the call side. We will automatically identify here on the 5 top call side and 5 top put side as well for the open interest. And for the we also have started a new option here which shows about big players, where we will be identifying for in the market, whoever enters the market, we will try to identify if there is any big change in the open interest in both the sides. By consolidating those information, we will get an idea if there is any detection in the market. So as of now we can see there is some drop detected, so that means the open interest, the people are squaring off their positions, might be because at most of the time we get this drop detected at 2 to 3 o'clock, because most of the people they used to square off their positions and they book their profits. And in our Nifty option chain analysis, we also have given the math span for open interest and also for change in open interest as well. And we have this PCR indicator, and PCR indicator also we have given with color representation, not only with the number. As we know, 0.75 it is bullish, and if it is 0.75 above, then automatically it comes bearish. Automatically we have given those formulas into this particular area. And we have given some good graphical representation about open interest in graphical representations as well. And also we gives automated signal collection from this area, even though if you are not available on that particular trade, but you really wanted to test in the market for at least for 1 month how the market is working and which time is going to work for you, we are going to have a fully automated tracking record, where automatically this data will be recording for every 5 minutes here throughout the market time actually. This is where you can test your paper trading, and you can check at what time is good for you to enter in the market. And we are making a transparency in terms of giving the analysis in the market option chain area. And we also have started a new option called CE and PE decay testings, where automatically this is where we do it. As of now, we are doing for every 1 minute actually. So wherever you see the crossovers, there we can see some great movement. Actually, yesterday we have noticed the same thing. Wherever you see such crossovers in the prices, there we have shown some great movement in the call sides actually. So I suggest always go through these signals. And we also have given the math span calculations here. And these are the foreign investors data as of now, since today is non-working trading day, so we will get this data on Monday. So always you can also refer the foreign investors data. If you want, I can quickly show you what has happened yesterday. I think there is some net issues. Most probably, I think we used to get those data here automatically. Then you can identify how much foreign investors are in long positions, yeah, how much they are in short positions. I think if I can get the number, I can explain you much better actually. Okay, let's see. I think if you are in the live trading, then automatically these numbers are going to reflect in your sheets. And we also show this option grid calculator, where our Black-Scholes method would be calculating from here. In background we have so many sheets here, but we really don't want to, I mean, disturb all these unnecessary sheets in the area. So all the time this, you can't see those information in your areas, because it will not help you out actually. So background we have so many calculations for this one actually, when it comes to delta, gamma, theta and vega. This is how we can calculate our stock prices, whether it is a fair price or it's in a premium price. Let us go to MCH as well. Even in MCH also the concept would be the same. If you are very good at option chain analysis, the concept would be the same. So let us take 24th October. We have some issues. Let us go to crude. There we can see some good liquidity. So if you see in this crude oil, what is happening here, the change in price has been decreased, and the open interest is increasing. And here the price is that means there is some bullish movement happening in the market, but it's in the range bound. Both the sides we can see some squaring of their positions actually. The open interest is increasing and the prices are decreasing. Here also the prices are increasing, and there are few areas the open interest are decreasing. That means there is some good movement actually here. Short covering is happening, so the market might be in bullish mode. So if you are very good with these numbers, automatically you can identify. So at the beginning level, if you really wanted to understand the data, somewhere you need to refer any of the website actually. So you can refer to this option chain analysis. If anyone required this option chain, this is a Google sheet actually. We give this access on a monthly basis. If you are interested, please let me know, and you can contact me in WhatsApp. I can guide you how we are going to provide the access to all the users. Okay. I hope in this today's sessions everyone could understand much details about this